this is the biggest macro trade
ever
in all of history.
Correct.
And we're in the middle of it. That's why Dan and I have invested personally. We've built asset management businesses. We've done, every different way of looking at this. This is the biggest trade ever given in history. And it's proven to be the case. It's the best performing asset of all time on any time horizon.
Bitcoin's recent surge, soaring to over $70,000 after crossing the $50,000 mark just 3 weeks ago, shows an extremely resilient market sentiment and a stronger potential for further gains. Key indicators, such as the absence of a drop in the federal funds rate despite record-breaking Bitcoin prices, signal a unique market environment. Bitcoin continues to attract investors seeking exposure to digital assets and a hedge against inflation, with significant potential for continued price appreciation. And with Bitcoin's ongoing success, there is much more room for the exposure of other crypto assets. In a recent interview, Raoul discusses the potential trajectory of Bitcoin and gold in the context of macroeconomic cycles and market dynamics. Raoul emphasizes that despite a 5% Fed interest rate being seemingly insignificant in light of Bitcoin's substantial annual gains, liquidity remains a significant driving force. Raoul acknowledges that while the current market conditions are promising, it's uncertain whether Bitcoin will experience a significant upward trend this cycle. Despite this, he remains bullish on Bitcoin and cryptocurrencies in general, saying that this asset class is the biggest trading opportunity in all of history. We will now bring you clips from Raoul Pal's discussion, as he shares his expert insights and analyses on Bitcoin and cryptocurrencies in general. As we show you these clips, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Make sure to watch the video until the end where Raoul Pal discusses the future potential of Ethereum. We hope you enjoy the video.
So also, I just want to clarify, because somebody's going to clip this in 3 years' time when the market's down 70% and say, these guys are wrong. We're talking over a time horizon, right? The time horizon is this adoption of this technology is ongoing, has been and continues to be and will be the biggest macro trade of all time. And yes, it comes with volatility, and there will be massive volatility en route. You've got to understand that a 5% interest rate is not a hurdle to an asset that goes up 100% a year on average, right? It's irrelevant. But liquidity drives assets. So liquidity did pick up, but as Dan's rightly said, the game is only just started in the liquidity cycle. At the end of this, the Chinese are in the middle of pretty much a debt deflation. They're going to print money, serious amounts of it. The Fed are going to cut, the Europeans are going to cut, the Fed are probably going to end up bailing out a few banks. The whole game is to be played. We've got an election to bribe voters with. There's usually, straight after the election, there's usually a fiscal stimulus. Let's say Trump gets in, he'll probably do a stimulus. There is money to be handed out all over the place. So what is surprising is, we had a very strong run even before the halving. It's early in the macro season, but it is what it is. Does it mean that we're going to have a really big run this cycle? I don't know yet. The cycle to me is driven by the macro. That macro cycle has been the 3.5 year, 4 year cycle, and it's the same cycle in all assets. So I don't see any reason the cycle would change unless we create some sort of weird monster bubble in crypto, or we just got a very strong cycle on our hands. Some cycles are stronger than others. And the last cycle, I thought cut short. I thought there should have been a next leg higher. I thought it should have got to 100, and it didn't. And I think people have PTSD from that. And so I think they're fearful of screwing it up again and getting too bullish. And I actually think there's actually more of a fear of something like 2013, where it kind of had a dip. Everyone thinks it's over, and then it went up like another 4x, something stupid. I think the bubble cycle's actually maybe a higher probability now than this left translated. When I talk to people about the left translated, when you ask them, it's just PTSD. If you just step away and say it's a slightly more aggressive start than we've had, why? Because we've got an aggressively more amount of capital has access to the space. So it kind of makes sense. At a very top level, more people have access to it, goes up more. Fine. I don't see any different. I mean, everything went down in 2022, and crypto bottomed earlier, and led, and then Nasdaq followed. So I don't see any real difference here whatsoever. It's a more volatile asset for sure because it's a more forward-looking asset. It might go up and down a little bit the same, but over any period of time,
Right.
it's ludicrous to own any other. I mean, I got to the point where just there's no point owning any other asset. Step back. I mean, I even started in this crypto journey back in 2012, 13, because of this whole process. It happened in Europe, and it's been a rolling process. An excess leverage society will end up destroying all of its banks. So this has been an ongoing thing. So it's not going to stop until they all disappear and you end up with some sort of nationalized banking system. You know, half the European banks are still insolvent, technically. You know, they're just being propped up by the ECB because you can't lose Deutsche Bank because it's the largest bank in Germany. And so, yes, over time, people will realize that self-custody of your own money is a better thing than holding in a banking. If they understand that it helps the Bitcoin price rise, they'll buy Bitcoin, much like they'll buy the gold ETF. But many people, much like they do with gold, buy physical gold, they'll buy physical Bitcoin as well.
Along with his analyses, Raoul Pal expresses his amusement and disbelief at the current state of the cryptocurrency market, emphasizing the absurdity of meme coins achieving enormous market caps. He acknowledges the entertainment value of the crypto market, but also warns against excessive speculation, advising investors to limit their exposure to speculative assets to a maximum of 10% of their portfolio. Pal also shares his current portfolio allocation, which includes a significant portion invested in Solana and hedge funds, with minimal exposure to Bitcoin and Ethereum. He also mentions his involvement with the Solana Foundation and discusses the potential impact of Ethereum ETF approval on the market dynamics. Additionally, Pal discusses the likelihood of Ethereum ETF approval and the potential implications for the cryptocurrency market. Let us now go back to the discussion as Raoul Pal discusses these points.
Have fun. It is a hilarious market. I've never had so much fun in my life as you can have in crypto. So just enjoy it. It's clearly fucking ridiculous that we're buying a token called Dog with Hat. And people are making literally tens of millions of dollars. And these are smart people. I own it. So I'm with it. But you know, it's fun. It's fun. It's nice to have financial markets that are fun. People don't take it seriously. You know, Dan and I came out of markets where people wore suit and ties and took themselves seriously. And here we've got grins on our faces. It's hilarious. It's hilarious that stupid people who know better do stupid stuff. It's lovely. I own a bunch of NFTs. I've been buying some high-end art in NFTs. But really, I put most of my Ethereum, just put it into the fund, the asset management fund that I've got. So that allocates it to hedge funds whose job it is to select all the right tokens. Solana. I'm also on the SUI Foundation, so I have some SUI as well. I've wanted to cover this whole crypto bet in a number of different ways. Because there's a lot of opportunities here, and I also wanted to see it and experience it all. And one of the things I wanted to do is go on one of the journeys of one of the large layer ones, but you have to be very careful of who you want to be part of. But this is a very serious group that's come out of Facebook. I got actually asked by one of the probably the best lawyer in all of crypto, who said, "Listen, you should consider this." And so. Yeah, so I've been on that journey. It's been super interesting. I don't talk about it a lot, obviously, because you get this problem of conflict of interest and shilling and all of that stuff. But it's very interesting, super high quality people, and amazing project. ETF is really interesting because there's a dynamic here, which is the more activity, the more ETH gets burnt. 28% of ETH is staked. That's a real problem. It's going to get a little bit unruly in ETH. And I think that's a very interesting dynamic that we have not seen. It's more significant than the halving in many ways, and that could really ignite this market. Now, there'll be less demand for an ETH ETF, obviously, than there is for a Bitcoin ETF. It's a different beast. They think of ETH generally as a technology and Bitcoin as a store of value. So I think they think of them differently. You know, I don't think the ETF will have a yield yet, but you know, technology with a yield is highly attractive at some point. So a lot of asset managers will like that a lot. It's easier to get through an investment committee than we've got this new store of value thing. So look, it'll do well over time. So I don't think it competes. Somebody raised a good point. I think it was Eric Balchunas, the guy from Bloomberg, who's been. He just said, listen, one of the most important things is people will package these two things together and create an ETF of the space. He's like, that's probably what drives the most volume. I think that's probably right.
Coinbase, America's largest cryptocurrency exchange, recently engaged in discussions with the Securities and Exchange Commission regarding Grayscale's proposed spot Ethereum exchange-traded fund. Grayscale had filed an application in October to convert its Grayscale Ethereum Trust into a spot ETH ETF, aiming to provide investors with direct exposure to the second largest cryptocurrency. Coinbase's presentation to the SEC addressed concerns about potential market manipulation, highlighting the exchange's surveillance sharing agreement with the Chicago Mercantile Exchange to monitor for fraud and manipulation. The presentation emphasized Ethereum's resilience to manipulation due to its market mechanisms. Following the SEC's approval of spot Bitcoin ETFs in January, Grayscale seeks similar approval for ETH ETFs, with expectations for SEC approval by May, as predicted by Standard Chartered. Meanwhile, Ethereum's price surged above $4,000 per coin for the first time since 2021, indicating growing investor interest and potential anticipation of ETH ETFs. As the crypto market continues its upward trajectory, investors and analysts are keenly observing patterns and trends to anticipate the future of digital assets. One such analyst, known as Rekt Capital, has garnered attention for his insights into historic Bitcoin patterns and predictions for the ongoing bull market. Rekt Capital, a pseudonymous crypto strategist with a substantial following on social media, recently shared insights into the potential timeline for the current bull market. According to his analysis, based on historic Bitcoin patterns, he predicts that the bull run could culminate in late 2025, approximately 518 to 546 days after the next halving event, expected around April 20th. This projection offers investors a timeline to navigate the volatile crypto market and plan their strategies accordingly. However, Rekt Capital also cautions about the typical behavior of Bitcoin leading up to the halving event. Historically, Bitcoin experiences a pre-halving rally, followed by a retracement just before the halving occurs, as miners' rewards are halved. This warning reminds us of the importance of monitoring market dynamics and being prepared for potential fluctuations in Bitcoin's price trajectory. In addition to his analysis of Bitcoin, Rekt Capital shares insights into other digital assets, including the widely followed meme coin, Shiba Inu. Despite SHIB currently trading significantly lower than its all-time high reached in October 2021, Rekt Capital remains optimistic about its prospects. He anticipates that SHIB will revisit its previous peak after a period of accumulation, highlighting the potential for a U-shaped reversal. However, the precise range for this reaccumulation remains uncertain, presenting both challenges and opportunities for investors. Additionally, Rekt Capital emphasizes the role of meme coins in driving market sentiment and momentum during bull cycles. Meme coins such as Floki, Doge, SHIB, and Bonk are expected to rally vigorously, driven by market psychology and investor sentiment. What do you foresee happening with the crypto market in 2024 and the years ahead? Do you anticipate sustained optimism, or are we likely to encounter huge corrections? Share your insights in the comments. If you found this video useful, please consider giving it a like and subscribing to our channel for more valuable content on cryptocurrencies and finance. Thank you for tuning in, and we look forward to seeing you in our next videos. As always, happy investing.